Ladies and gentlemen, how are you doing? Matthews here from Emadel Forex Traders. Today I'm here with a trade breakdown on Euro AUD, the loss that we took on Monday yesterday. Whoa, you guys, this was quite sad, right? I just want to be raw with you guys. This was actually bad. Let me first of all show you the setup before all that happened. This was the setup right here. Let me just show you in a minute. Yeah, right here you can see a very nice setup, our very usual setups that we have. Nice QML here. I said first of all we had a nice retracement here. Then we had the QML low, a higher high right there, and we had nice candles that broke this structure right there. Then right here we had our, which formed the lower low by, of course. Then right here we had our first resistance and second resistance right there, giving us our fake out zone right here. So, and then we came here, the market actually gave us a little bit of a rising wedge before breaking to the downside. That was like, okay, that's my signal to actually enter. And you can see right there the signal was sent. You can see the stop loss was about 25 pips and the target was about 235 pips, like that. A very nice risk to reward ratio. But guess what happened? The market literally went to the upside, took us out, and then just like that, it dropped. It dropped like, let me just show you guys. The market, after taking us out, the market dropped about 218 pips. 218 pips, ladies and gentlemen. So this was actually very, after we entered, because we entered right here, the market took us a little bit in profit and then it pushed to the upside, then dropped a little bit, pushed even further, and then eventually the market dropped, retracing back that level, and then dropped even further, like that. Yeah, this was hard. This was really hard to deal with, actually. So that's what comes with trading, ladies and gentlemen. I know most people don't show you this because most people don't like talking about the losses, right? They always want to show you that they are winning every time. All the trades are winning. They have a 100%, 90% win rate. That's not true. They just don't choose to show you this part about it. Okay, this happens to any trader that you might think of. It's just that most people are not willing to show you their losses or their losing setups, losing trades, because they just want to show you that they're always winning and everything. Yeah, otherwise this is what happened. We followed our system, therefore it's not a loss. It might have been a loss, this trade might have been a loss, but essentially we followed all our rules and it just turned out to be a loss. So what happened here? What are the takeaways here? So from here you can see that probably my stop loss was a little bit too tight. Okay, my stop loss was a little bit too tight. Of course, you guys, you know how I love those sniper entries, right? Those beautiful sniper entries that you always see, I love those. But however, those might come at a fee, and these are the fees. All right, sometimes the market will just drop from here and they just continue to drop, but sometimes this doesn't happen, when the market goes up and then goes down like that. This is very common. So let's see where the market reached. So the market went about 40 pips against us before we, from where we entered, and then it dropped. It went about 40 pips in drawdown, and then the market dropped like that. So is there anything that we can actually get from here so that such things can be avoided? We actually had another trade that actually did the same thing. I'll show you in a minute. So let me show you another thing, another trade right now I'm talking about. That was GBP Swiss. Yeah, GBP Swiss. Same thing. The market actually took us out and then dropped a little bit down like that. Let me show you. this trade as well, it met all our criteria. It met all our criteria, and then we took the trade right here. Right here. So QML low, higher high, and I loved this. I love this. It was actually initially it was like that. So my stop loss, my entry was around this level right there, and therefore my stop loss was something like this. Yeah, it was a little bit higher than that. Yeah, somewhere around that level. And this was here. And see what happened after market came here. We saw this rejection right there. It was a nice rejection at that level. Then we jumped in, and guess what? The market dropped beautifully in our favor, and then retraced, dropped about 1 hour, actually about 2 hours. And then what happened? The market pushed to the upside and took us out, and then after that the market dropped beautifully again, dropped really heavy like that. So again, is there anything that would have done better here? I think there is. I think the stop loss was just too tight. So initially the stop loss was about 20 pips, so probably would have done better by probably making it like maybe a 30 pips stop loss, maybe about 30 pips. Yeah. So what criteria do I advise that you should be using for determining where you place your stop loss? I'm sure you guys have heard of an indicator called the ATR, the average true range. So let me just show you right now. So I think that can be a great tool in order to avoid being stopped out prematurely. Okay, so let's pull out the indicator called the ATR right here. So what does it do? So this one measures on average how that particular market moves. Okay, it measures on average how much that particular pair moves on a particular time frame, right? So like this is Euro AUD on the 45 minutes time frame. So if you look here, come here, right there, it's showing about 25 pips. So what I can advise you is your stop loss should be at least 1.5 ATR. So if this is 25, then you can add half of 25. This is the means like 12, maybe add 12. So 25 plus 12, probably like 35 somewhere there. So that's your stop loss. So that's a 20. That's when initially my stop loss was about 25. So if you look at this, that's about what's like 30, almost approximately 30. So meaning your stop loss is supposed to be that plus half of it. So about 30 plus maybe 15, which is like maybe 45. Then your stop loss is supposed to be like 45 pips in order to avoid being stopped out prematurely. Of course, that's going to affect your risk to reward ratio and also the losses you're going to use, but that's actually better than being stopped out prematurely and the market continues to go in your direction. This was terrible. Trust me, you have no idea the emotion that came with this particular trade. Just looking at this trade took me out, and then went exactly according to how I analyzed. This was painful, and it's part of trading, of course, and I think we can do something about it. So make sure your stop loss is at least 1.5 ATR. It's going to help you. It's going to prevent you from being stopped out prematurely and the market continues to go in your direction. Usually my stop loss is only a few pips above my higher high right there. So usually my stop loss is just around that level there, because I want to be wrong early. It's better to be wrong early so that you avoid, because this market would have easily gone up like that, and I'd have been praising myself right now. But again, we have to find that sweet spot, right? That sweet spot that benefits us in the long run. Because if we have a lot of these stops out like that, then our win rate is going to be affected, right? So make sure that your stop loss is at a place where it's less likely to be taken out, because these are levels, these highs are usually levels where the market usually just wicks and then it will just go up. It will weak that level and then the market just drops. So I would advise you to continue to use 1.5 ATR, whatever this ATR number is, and then add divide it by 2, and then that same number that you have, then add it so that that becomes your stop loss. So it changes according to time frames. It will change. So for example, if I go to my 1 hour time frame on the same pair, it's going to be different. Right now it's showing me how much? About 37. Okay, so meaning my stop loss at least, so 37. So if you see, if I go to 37, I would have been stopped out still. So meaning at least 37 plus, if I add 15, so if my stop loss is around maybe 50 pips, right there, you see, I won't have been stopped out here. You see what happened? So let's take another one, another trade as well. Let's see if we increased our stop loss to 1.5 ATR. So in this one, the stop loss was, the initial stop loss was 20 pips. So my stop loss was 20 pips, meaning it was around somewhere there. And right here, my ATR is saying 20. So if I add 10 to make this stop loss 30, I wouldn't have been stopped out here. You see what I mean? You see what I mean? Do you understand what I mean? So this is how it is, guys. So I thought I would share this with you guys because I honestly, I'm sure you've noticed by now that we are all about transparency. We want to show you the real thing. We don't want to sell you the idea that no, we have a 90% win rate. Nah, we have losses. But you know the beauty about it? Just one trade can wipe out about 4 to 5, 6 losses. Only one trade. I only need one trade to wipe out all those 5 losses or 6 losses in a row. Just one trade is good enough. So I hope you find value in this. So I just thought I would share with you guys these particular setups and everything. So I hope you find value in this. If you do, make sure that you like the video, comment in the comment section. Comment in the section. Let us know, how do you manage your trades? How do you decide where you put your stop loss? In the comment section. And what are your best practices? Okay. Otherwise, until next time, guys. Goodbye. God bless you.